How's it going, everyone? It's Sam. I hope you're ready for a crazy next 4 or 5 days because the market probably will be very volatile. We have a lot of big things happening this week. We had a lot of news that just posted over the last few days that also indicate that we are in for a wild ride. If you don't mind, please hit subscribe underneath the video. Turn on that bell notification so you know right when I post future videos. You can also join the Patreon in case you want to know what I'm buying and selling. And I just posted an exclusive video on the most influential article I've ever read, and it is in the finance space. So if you want to join that, you can check it out underneath the video. Again, nothing in this video is financial advice, but be ready. Stay through to the end so you can see everything and my thoughts on it. But as you can see, Bitcoin and crypto doing well. The whole market cap around 1.23 trillion over the last 24 hours. Chili's has done well. Neo has done well. But for the most part, it's been quiet. The volume's been low. There haven't been a lot of swings in the market. And I think part of that is just because there's some liquidity drying up with choke point 2.0. Part of it is a lot of people are just waiting to see what happens this week. We have a big economic week, one of the biggest ones that we've seen in a long time. Core CPI is coming in on Wednesday, April 12th. We have obviously CPI coming in at the same time. We're getting the minutes for the last FOMC meeting from March as well. We have the Producer Price Index, or PPI, which is a leading indicator, coming in on Thursday. We have obviously initial jobless claims, continuing jobless claims, U.S. retail sales on Friday, and this is just gearing up to be a crazy week. Obviously, CPI, one of the biggest events of the month, will influence what the Fed does at their next rate hike. Recently, we've seen good news be good news and bad news be bad news. And I think part of that is because the retail investors and I guess all investors are now starting to think that the Fed is stuck and they're not going to be able to continue raising rates. So they'd rather see good economic data come out. They know that they can't continue to raise because the banks, and some interesting things are happening with the banks, which will show some news on that. But they're stuck because they can't continue to raise rates without breaking the banks and breaking other things as well. And inflation is also coming down a little bit as well. So we'd rather see this kind of landing pad, the soft landing that we've been hearing about. Now, we do have CPI coming in at an expected 5.2%, which is down from the 6% back in February. And we're also expecting core CPI to come down as well. Let me get back here. Core CPI is expected to raise 0.4% for the month versus 0.5% for the month in February. So expected to rise to 5.6 versus 5.5. If we come in below last month, obviously that would be really positive. The CPI is expected to go down to 5.2%. So be on the lookout for those numbers. PPI is also going to be important. That's coming Thursday. But Ethereum Shanghai upgrade is coming on Wednesday as well, at the same time as the Fed minutes, at the same time at the CPI. Obviously not the same time of day, but the same date. And this is going to be shaking up the crypto industry. Obviously, a lot of people have a vested interest in Ethereum at a $225 billion market cap. It's really hard to tell what will happen out of this. As I said in a video a few days ago, I'm not making a big play. I'm not trying to buy in right ahead of it or sell out right ahead of it. I am happy to pick up some more Ethereum if we start falling down, and I think Bitcoin dominance probably will tick up at some point. So I'm happy to buy some more Ethereum at some point, but I'm not so sure that we're going to just go to the moon because of this. There's a lot of back and forth whether the tokens will give enough liquidity to dump the price because people will be able to start unstaking their Ethereum, or whether just a lot of investors are not going to be able to buy Ethereum and stake it and feel comfortable with that. And who knows, they might even push it back again. So we'll have to see what comes out of this, but I'm not making any big bets on this specific event. Now, the Fed is stuck. I know we were just talking about CPI, but we're starting to see more and more information come out about U.S. banks. U.S. bank loans and leases fell by $45.1 billion in the week ended March 29. So banks are starting to dry up liquidity. They're not being willing to loan as much. They're not being as flexible with their clients. They are just being more cautious in general, probably raising the requirements to get money from them. Keep in mind that they are very leveraged instruments anyways. They're very leveraged companies. And they're just trying to reduce their risk. Keep in mind, though, that does decrease the chance of growth in the U.S., basically acting as another rate hike. It basically causes the economy to slow down even more. We're also seeing deposits at the bank start to fall. And we've seen this for a lot of weeks now. I believe this is a 10th weekly time that this has happened, but we saw another 60 billion or so, 65 billion come out of U.S. banks in deposits. So a lot of people taking their money out and just putting it into treasuries themselves or investing it, basically doing anything to take it out of the banks. And we also got news on the balance sheet. The Fed is reducing the balance sheet, and this is something that they've done for 2 weeks in a row now. Remember that they increased all this liquidity to the banks. Now this is starting to look a little bit worse. They're starting to take some of this liquidity back. And I said last week this was kind of a flipping point because they went from easing, essentially quantitative easing, to doing exactly what they said, which is they're actually taking the liquidity out again. And they're starting to continue to reduce. And this was a big reduction here versus the week prior, about 30 billion versus 73 billion. So a big reduction there. So this is getting harder for the Fed. I say that they're continuing their goal to try to reduce inflation, but it's got to be scary. It's got to be scary when they know deposits at commercial banks are going down, lending is going down. So these banks are going to be stuck where they're having a tough quarter. And at the same time, the Fed continues to reduce liquidity to them most likely, or they're just, they're getting rid of other assets. But this is getting worse for the banks, getting harder for the Fed. But hopefully they can kind of round out their raises and then start lowering them eventually, maybe this year or next year. Some other news just on GBTC and Grayscale. This is legal notes as well as a note on ETH from a trusted legal source coming from Andrew. I've been following him for a while. He has good information on all this and on Binance. Given current environmental conditions, no chance of ETH futures ETF being approved. It's very likely we get a spot Bitcoin ETF in 2024 if Grayscale wins. So that's kind of interesting. Very likely that next year we'll get a spot ETF if they win. So they have to win. And it's very likely that we'll get a spot if they win, not necessarily if they lose. And it's still over a year away. So anyone that is talking about 2023, maybe that's not too likely at this point. Other ETFs may be approved first. Now, I'm not sure if they just mean like other crypto ETFs, other ETFs in general, or other spot ETFs. That's kind of interesting that Grayscale wouldn't win this bid basically to be the first spot ETF when they have so much Bitcoin. They say if SEC attempts to unwind approved Bitcoin futures ETFs, a bevy of lawsuits could ensue. Action would define arbitrary and capricious. So it doesn't look like they will probably undo what they've already done with some of those ETFs that they had for futures. I believe it was like a handful of ETFs, but it still sounds like we're far away from a spot ETF. Now, of course, there's information on this all the time. Maybe we get it in 2023, but it sounds not very likely right now. Let me know your thoughts on this underneath the video. Let me know what you think the Fed will do. I think it keeps on getting worse for them, but I could always be wrong. It's tough. They're being tough, and so far I think it is working. It's calming down inflation. But if we get a good CPI this week, if it comes down faster than we expect, obviously that's going to put the Fed in a really good place to not have to raise at all at the next meeting. Let's take a look at what people think will happen at the next meeting. At this point, it looks like a 34.5% chance of no raise and a 65.5% chance of 25 basis points. So be on the lookout for this to change. Could definitely push up or down the market depending on what happens. Thank you so much for watching. I appreciate it. Check out the link underneath the video to the Patreon. In case you want to get some free stocks as well, there are links to moomoo, Webull, and M1 Finance underneath the video. And I'll see you in the next one. Bye.